Dr. Rangarajan, are you surprised or is this what you expected? Is the policy entirely on expected lines?
I think the policy is very much on expected lines. And it is prudent to wait a little longer and then take a decision on what should be done about the policy rate. We do not know at this moment about what the monsoon is going to be, and the new budget is yet to be unveiled. Therefore, any decision to change the policy rate will have to wait on these things, and therefore I believe it is a wise decision to leave the rates unchanged.
As far as the cut in SLR, sir, is concerned, the cut by 50 basis points, will that make a significant difference as far as access to credit is concerned, as far as corporates are involved?
I do not think so, but it is certainly worthwhile to move towards a lower SLR. The timing has to be decided by the central bank. But I have a feeling that even as of now, that banks in general are maintaining an SLR which is above the stipulated rate. Therefore, except in the case of some individual banks, in the aggregate, it may not make much difference.
As far as export refinance is concerned, the further liberalization, will that help significantly in pushing up our export performance, or is export performance more a function of global demand?
Well, export performance is a function of many things. It is primarily driven by global demand, but the exchange rate is also an important factor influencing exports. And to some extent, export finance is equally important. And perhaps in the case of export finance, it is not only the availability, but also the cost at which it is available becomes important. Therefore, export finance and the cost at which finance is available do play at the margin a certain role in stimulating exports.
So we've seen a huge run-up in the stock market driven mainly by FII inflows. Will that mean surplus liquidity? What is the risk of an asset bubble developing? And will the RBI have huge problems in mopping up that liquidity through sterilization? Because they don't have those sterilization bonds anymore, market stabilization bonds.
Well, something will have to be done sooner or later, because if the capital flows come in and if they get accumulated in the reserves, automatically there will be a monetary expansion, and that level of expansion may not be consistent with the objective of containing inflation. Then at that particular point, some degree of sterilization becomes absolutely essential. Either it has to be through the sale of securities at the disposal of the government, or through the issue of special bonds. But the stabilization bonds is not the normal thing to do. Open market operations are the primary instrument through which liquidity should be sucked. Therefore, the Reserve Bank will have to keep a careful watch on the impact on money supply and the availability of credit and money as the capital inflows come in. I think a watch is very much needed.
So one of the issues is that if you could improve our absorptive capacity of the economy, then all this money coming in could get absorbed. What can the government really do to increase the absorptive capacity of the economy? Because there is no dearth of projects that require financing. Why is it that we're not able to direct this money into those areas?
No, obviously when the economy is growing faster, even according to the standard theory, the money demand will increase, the credit demand will increase. Therefore, accelerating growth is one way by which we can neutralize the impact of additional liquidity. But then growth is a function of many factors, particularly the industrial growth. Certainly has been stalled by two things. The investment rate has fallen, but even more than the fall in the investment rate has been the output fall due to the fact that projects have not been completed in time, or complementary investments have not been forthcoming. Therefore, we need to address the issue at two levels. We need to look at the policy level to see what is coming in the way of the implementation of projects. And two, we need to look at the more micro level of seeing why projects are not getting completed. If we address both these issues at the policy level and at the level of monitoring, I think growth will accelerate, because I believe that the gross fixed capital formation rate, which was even according to the latest data released a few days ago, is still around 30% of the GDP.